But it's even worse than that because 2024 is the election year. And the new Congress will be sworn in the first week of January. And the new president will be sworn in late January. So you will have a lame duck Congress, and you have a greater than 50% chance that you will have a lame duck president responsible for negotiating a resumption of the debt ceiling and increase. Good morning, it's Jeffrey Christian of CPM Group. It's the 6th of June, the anniversary of D-Day, about 11:25 here in New York City. Gold's around $1,973. Silver's around $23.50. I want to talk a little bit more about realistic expectations for gold and silver prices. And I also want to talk a little bit about the debt ceiling. There's a particular aspect of the debt ceiling agreement that I think speaks volumes about what to expect from our government going forward. And then, the $30,000 gold and $3,000 silver that various promoters have been talking about on the internet. I think it really drives home to me how ludicrous some of the marketing efforts have been. But let's talk about the debt ceiling. There's one thing that sticks out that speaks volumes about the seriousness and intention of the politicians that have crafted the debt ceiling. And they're not good intentions. And that is that the debt ceiling agreement suspended the debt ceiling until January 1st, 2025. January 1st, 2025. Now, Congress goes on recess for the last couple weeks of December. They won't be there during that crunch time when they try to fix that which they've broken. The old joke is that politicians are very good at fixing things that they've broken. And the debt ceiling is a prime example of that. It's a nonsensical thing that the politicians insist on keeping so that every few years they can congratulate themselves that they fixed it. And they never fix it, they just extend it, kick the can down the road. But January 1st, if you were serious about trying to have negotiations related to the debt ceiling, you would not choose January 1st, 2025 as the date. The least you would do is say, hey, let's do January 31st, 2025. But January 1st means that you will be going into the year-end holiday period when a lot of people take off, including the Congress and many people in the administration. And you're putting the onus on this last-minute salvation at that time. They did this a few years ago and shut down the government for an extended period of time in December into early January. But it's even worse than that because 2024 is the election year. And the new Congress will be sworn in the first week of January. And the new president will be sworn in late January. So you will have a lame duck Congress, and you have a greater than 50% chance that you will have a lame duck president responsible for negotiating a resumption of the debt ceiling and increasing it. And it will have to be increased at least 10%, at least $3 trillion, simply because you can look at the deficits that the government projects in 2020 for the rest of 2023 and the course of 2024. And you're going to need to increase the debt ceiling at least $3 trillion or roughly 10%. And you will have a lame duck Congress doing it, and most probably a lame duck president. Right? Anybody who reaches that agreement to do that is saying to the voting public, do you think that I really care about fiscal management of the U.S. government? It's a joke. It's an insult to everyone, and it's standing there in plain sight. Now, let's talk a little bit about people who, insult the intelligence of investors. $30,000 gold. This is the price of gold since gold prices were freed to float in 1968 in the United States. And you can see the price was, $35 at the onset, got up to about $850 on an intraday basis. These are monthly average bases. The monthly peak around $612 or so in early 1980. Came back down and traded between $350 and $400 for most of the next 20 years. Started to rise around 2001 and reached record levels. And, it's touched $2,000. But there are promoters out there who are promising you $30,000 gold, I think by the end of July. This is the price of gold historically on a chart that's scaled to $30,000 an ounce. Probabilities, it's just beyond comprehension. What's also beyond comprehension is that investors will believe this. They'll believe it because they're scared of the state of the world, they don't understand things, and they're taking their information and advice and analysis from people who either don't understand things or purposefully are misleading them, trying to sell gold and silver on fear and improbable fears. There's plenty of things to be afraid of, but the things that they're telling you about aren't them. This is gold investment demand. Investment demand drives gold prices. Gold investment demand is driven by economic, political, and financial factors more than supply and demand within the gold market, although supply and demand in the gold market are important. You can say that investment demand has been high really since 2000, when that price of gold started rising. Came off in 2014, 15, 16, 18, 19. Got high in 2020 when things got ugly in the world. Came back off, but it's still at historically high levels, greater than 25 million ounces of gold. Net physical additions to investor holdings on an annual basis. So strong gold demand, high prices, but not $30,000. Silver, same sort of story. This is the price of silver since 1975. Monthly averages, again, you can see the monthly average was peaked around $38 in January, I believe, of 1980. Came back off, traded between $350 and $550 for the better part of 2 decades. Started to rise around 2005. Did get up on a monthly average basis, did get over $40 in April of 2011, and then came down with a thud. Lost more than half of its value. It has risen back, and on a monthly average basis, it's gotten up to around $27, $28. There are people who will tell you that the world's going to collapse and the price of silver is going to $30,000 within the next few days or the next few weeks or by the end of July, depending on which pundit you listen to. This is the price of silver on a scale to $3,000 an ounce. Highly improbable, and you shouldn't believe it. This is supply and demand balances, the net additions or net reductions of silver bullion inventories. And you can see, again, investment demand rose very strongly around 2005, 2006, turned positive. Investors were net buyers of silver. And they have stayed net buyers. They got very close. It came down from 200 million ounces almost in 2011, 2012, down to less than 50 million ounces in 2019, and again last year. But it is still positive, and our expectation is it's rising. Not enough to take silver prices to $3,000. There's another trope that's going around, which is, if not now, never. And you're seeing this, and perhaps CPM Group is partly to blame. You're seeing people who have been perpetually bullish with outrageous and unreliable and improbable projections about the prices of gold and silver, starting to say, hey, maybe these prices are going to collapse. And maybe it's because people are calling them to order and saying, hey, dudes, let's get realistic here. So now you've got this other trope, which is, hey, given the state of the world, with war in the Ukraine and tensions between Russia and China and the United States and the rest of the world, and all of the economic and financial and monetary and currency issues, if the price of gold's not going to $30,000 now and silver's not going to $3,000 now, it never will. Well, that's probably true. It probably never will. But it will rise. Both prices will rise sharply in periods of time of even greater financial and economic and political stress. And our expectation has been and continues to be that that'll be probably within the next 30 months, 2024, 2025. And again, our Congress and our administration are really helping us set up for another nasty period of stalemated government and fiscal irresponsibility, December 24, January 2025. So our expectation is the prices will rise. It's not now. It's if not now, never. It's if not now, probably soon. And soon is defined mathematically or quantified the next 30 months, next 36 months. That's our view. If you are a CPM Group client, you can plug in a couple weeks on the summer solstice, 21st of June, 11 a.m. Eastern Time. We will have an open question and answer forum for our clients. You can send in questions ahead of time and we will address them, or you can type in questions during the online seminar that we'll have. It's a chance to challenge your own assumptions, challenge our assumptions, ask us to flesh out things that we've either written in our research that we send to our paying clients or said in these videos. That's coming up in a couple weeks. If you want to be a CPM Group client and you're not, go to our website at cpmgroup.com and sign up for some of our programs, buy some of our research, and you'll get on the list to be a client. That's about all I have for today. I'll talk to you again probably on Friday. Take care of yourself, take care of those around you, try to help the world in some way, and be careful.